every single day. Get better. Put your head down, grind in the darkness, and then when the light comes, rise, fam. You got this. Keep going.
Hey everyone, what's going on? Nux Trades back with another video today. Today we're going to be covering some new concepts that I've been exploring and some new discoveries I've had in my trading. I've kind of flipped my trading style a little bit. I've converted some things, and I think it's time to give you guys a little update since things have been going very well. But before I get into all of that, make sure you like, comment, and subscribe on this video. If you want to see more of these videos, it keeps the algo pumping for me on YouTube, so I appreciate that. If you want to stay up to date, make sure you give me a follow on other socials at Nux Trades, as on the screen. If you also are interested in seeing my daily commentary and getting more personalized market exposure and market narratives with me, make sure to join my Discord link in my YouTube bio and Twitter X bio. Um, yeah, so we'll jump right into it. I'm going to start off with showing you guys some of the Discord statements I had today and some market calls that I had using my new techniques. Yeah, so to jump right in, some of the stuff I was showing the Discord today. So first of all, before pre-market even happened, before 9:30 open, I was already in a NQ scalp that I got, and I can dive a little bit deeper into why I took that scalp once we get into the market. But I just want to show you some of the stuff that I was calling in my Discord today. So I took this NQ scalp. I think I got 13-ish handles off of that on NQ, so a good little scalp right there. Next thing was, after that happened, I said that NQ was kind of looking like a manipulation leg right now, and we'll see what 9:30 open brings us. This was 9:30 open was just before this, so right now I'm seeing manipulation leg. After this was after the 9:30 open. We filled this fair value gap super clean, and then we dump with the distribution leg. So a little sneak peek on what you guys are going to be learning today. And then after this, we get a 15-minute short off of this move, or not a 15-minute short, I apologize. A 1 minute short to the 15-minute lows after that distribution leg, or with that distribution leg that I called. So if you were in the Discord, you were able to see the bias right there and find this 1 minute setup. And then also here's some of the stuff that I was calling today. We'll dive deeper into more of this in the next slide. So we'll focus on this one for now. So on the hourly, I noticed that we were retracing at a discount and we had consolidation accumulation right here, and then we were dumping with the manipulation leg, and this fair value gap, this BISI looked really appetizing with the inverse fair value gap right here. Dumped into that, and I said we're looking for a potential reversal pattern on the BISI, and we get the distribution leg off the BISI right here, and I did not get filled on my NQ order. Would have been over $1,000 trade, which would have been awesome. It did ultimately hit. I did take it on ES though, and got some handles off that as well. So that's what we were looking at on the hourly for NQ. And just to show you that. But yeah, so this is some of the stuff that I was calling at the Discord today. If you guys are interested in seeing these calls as they happen live, make sure you join my Discord and come in and see what's going on. But now we'll jump right into the charts. All right, so now we're going to jump into some of the chart stuff, and I'm going to explain to you guys what exactly I've been learning. So the two concepts mainly that I've been learning are both the AMD accumulation, manipulation, distribution, and market maker buy model, market maker sell model. And a quick shout out to Scorp Trades on Twitter. He did help me a lot with this, and he opened my eyes to a lot of things. So make sure you give him a follow, check out his content. And then some of the other content I watched to learn this stuff was Justin Whelan's videos. So you guys all know him. Be sure to check out those guys' content if you want to get more deeper in this. Again, I am newer to this, so they have more experience than I do. So just to jump right into the ADM, right? So we're looking at accumulation. So what is accumulation, manipulation, distribution? So we have accumulation right here. It's kind of when the market is just consolidating, right? And you never really know when the market's going to break out of this consolidation. Okay, so you have something that looks like this as consolidation, aka accumulation. So we're going to mark this as accumulation. Okay, so right now we have sell side, and all these sell stops are put in, and all these buy stops are put in. We haven't really taken either side, right? We're just chopping. Okay, so then we can look at what we call the manipulation leg, right? So for the manipulation leg, we may pump, sorry, we may pump above this high. Okay, we'll pump above all of these and do some price action here, okay? And then what may happen is, apologize, I don't know why that stopped moving. What may happen is we get this, and then we get a reversal down here, okay? Sorry, I'm new to using the path thing. Someone just introduced this to me the other day. So we get the manipulation leg up, okay? So this is the manipulation leg, and this is going to be in red. And then after the manipulation leg, we actually get our what's called our distribution leg, okay? So the distribution leg is going to go lower, and maybe it'll do something like this, and then continue lower, okay? So this is the distribution leg. So I'll label all of these for us. So we have accumulation, manipulation, and then distribution, okay? So through here, we are accumulating orders, and then manipulation leg, we stop out all of all the sellers that were above these highs. So we stop all them out, and then we distribute orders lower. So that's how the market, or that's how AMD works: accumulation, manipulation, distribution. So we can look into that here in a second too. Actually, it may be best just to start with that right now, and then we can get into some of the market maker model stuff. So right now, we can go on and start with some of that. So I will show you what I was looking at with that daily bias, the hourly bias that I was showing you earlier, right? So we'll go on and X out some of that. So if we go to NQ right here, and you can see this really on any time frame, right? So if, like that's the thing about this. I was introduced to price and time is fractal, right? So my concept should be showing up in every time frame. So right now we're on the hourly, right? So what do we have? Accumulation, and I'm gonna drill this into your head so where you will see this every time it happens. So accumulation, manipulation, and this isn't even today's price action. This is just any day. This is back on Friday. Okay, accumulation, manipulation, distribution, right there. Okay, so then we can look at where's another chop fest. Trying to find another example without looking at the one today. So I guess we can look at pretty much any of these. I mean, we have accumulation. I mean, this is kind of a sloppy example, but accumulation right here, manipulation to the upside, and this is when volatility was low, so we don't have the cleanest moves here. And then distribution lower. So accumulation, manipulation, distribution, right? So then I'll go to today's price action. So I wake up this morning, and before I'm even looking at anything, I check the hourly. I look at the hourly. What's going on? I see that we've been in basically accumulation consolidation the entire night, right? Since the opening of the week, we've just been consolidating, okay? And I see that we have on ES, not on NQ. Here, I can go to ES real quick. So on ES, we have this BISI right here on the hourly, okay? So if we look at this BISI, we have it in discount. So price is looking to retrace to that BISI in discount furthest long, right? And then we can also apply MD, okay? So what we have is accumulation here, and then we have manipulation to the downside to a higher time frame PD ray, this BISI right here. And then what do we get after we hit that BISI and after we've manipulated? Distribution to the upside. And this is midway. We're about 2 o'clock into the market right now, so day's not over, but expecting us to continue higher to take out this buy side over here. If it doesn't happen today, that's fine. We may get it tomorrow. So accumulation of orders, manipulation to the downside to stop out all of these buyers to hit a higher time frame PD array. We also have a inverse fair gap on the high time frame here, right? Inverse fair gap, BISI, and in discount. Perfect long setup to distribute higher. So that was my bias this morning, okay? So now what we look at is when I was about, let's say this morning, when I saw that we were distributing lower, okay? So I wanted us to distribute lower, so I dropped down to the 5-minute time frame, and I will just, I mean, I could go to the 3-minute, the 5-minute, whatever, it doesn't matter. So I would just watch, okay? And I want to see some type of reversal pattern off of this BISI. And what do we have right here? Inverse fair value gap. We have inverse fair value closed above, which is perfect because if you've watched a lot of my other videos, you've seen that I like when inverse fair value gaps get closed above. I don't trade the inverse fair value gap. I just look for it to get closed above, okay? And what happens next? We get a fair value gap in here. Long position with stops below this low, sure. and then we can ride it potentially all the way up to this high, right? That'd be our first target, and then we could even go all the way up here. Sorry, this wouldn't be first target. First target would just be for me, I go 5 handles, second partial at 10 handles, and then rest at this high, and then rest at triple equal highs up there. So we'll target the 22 handle profit, which some people in the Discord did actually get today. So we'll target this, just so you can watch what happened, right? So here's the fill right there. Stop. We'll move the stop loss, just so you guys can see the power of this, right? Look, fill, and we get, look, another fair value gap here, and we have an inverse right here that gets closed above fair value gap here, retracement of the fair value gap, retracement a little bit lower again, and boom, just like that. It's that easy if you can read AMD. If you can read AMD, align it with higher time frame PD arrays, which I've had the most success with thus far, aligning the manipulation leg up with a higher time frame PD array, and then catching the reversal off of the manipulation leg. It's that easy. It's that easy. So there was a 22 and a quarter handle trade if you caught that, right? Discord did catch that. Shout out Discord for that, and I think they were enjoying all of my readings today. Discord's completely free, by the way, so come over and join that. But yeah, 22 handles right there. Like it's that simple, right? So that's something that I read this morning in price action. And then if we go over to NQ, we actually had a NQ 3 minute. The 3 minute gap was very clean on NQ, right? So if we zoom out to the hourly, right, we don't have a PD array necessarily on NQ, which is completely fine. We're still retracing into discount. We still got the discount retracement. Trace into discount, and then what do we do after we retrace into discount, right? So we go to the 3 minute time frame, and what do we have here? And this is the one I did not get filled on. Wish I would have got filled on this because this was a killer trade. Stop below this low, and we can target. Shoot, I mean, eventually, I don't even know if we ended up getting up here, but we can target up there. We can target these highs right here. We just want to target liquidity, right? So we target liquidity. So I mean, we can just see if it gets there. I'm not sure it does, but we'll just see, right? So there's our first entry right there. And then we can just ride it up here and see what happens, right? Because I don't even know what ends up happening. So we'll just 10x. I don't know if we're there yet or not, but boom. Look at that. That's simple. 123 and three quarters handles just by looking at simple AMD accumulation, manipulation, distribution. Let me go back to the hourly and show you this again, just so you can see what we're looking at. Okay. So what have we done, right? And what have we done? Answer with me. Ready? Accumulated, manipulated to discount on NQ and a discount and a higher time frame BISI on ES. So we've manipulated leg, and then what do we do? Distribute higher. It's right there. Everything's right there. You literally catch reversals using this pattern, right? AMD. Okay. So that's the other thing I wanted to show you guys. I mean, the next thing we can look at is the market maker model, right? So I've been studying the market maker model a lot. And if you haven't looked into the market maker model, this is where I highly suggest you looking into Justin Whelan's videos. He's very good at explaining what the market maker model is and exactly how to use it. Okay, so I'm gonna draw the market maker model. Okay, so what we have is buy side of the curve. So market's going up to here. Okay, and I'm gonna draw this super in depth so you guys can screenshot it. If you screenshot it and you want to use it, just give me credit. Okay, I appreciate that. Oh my next trades tag left. Hold on. There. Now you can't use it. So we have buy side of the curve, right? So this is all buy side. And then what do we have after this? Okay. Let me draw this a little bit better actually. So we get this leg here. I should probably. Okay. Let me draw this a little bit better just so we can make it cleaner. Then we get this move. Okay. So this is the buy side of the curve. Okay. And I'll go on and label this. Oh, you can't type on there. Okay. Either way. Buy side or market maker buy model. Okay. Market maker buy model. And then on the opposing side, we have, well, on our way up, first of all, we have liquidity generated at all of these lows. Okay. So sell side liquidity generated at all of these. So we'll mark these out. I mean, this is the most recent list. So that would be a market structure shift if it closed below there. So sell side, sell side, sell side liquidity generated at all of those lows, okay? So now what are we looking for? We're looking for a big move down, close below the previous low that made the high, and then we're looking at return into a PD array to continue lower and take out all of those sell side, all of this sell side. Okay, all of that sell side. So then on this side we have the sell side of the curve, sell side of the curve, or the market maker sell model. Okay, and the key in this, right? So we have a market structure shift right here, and then we have return to a PD array in here, most likely fair value gap or whatever. Okay, so return to PD array. So the thing that really opened my eyes up for this, right, is I always used to struggle with this because I did study the market maker model in the past, and I have used this model before, okay? But what really opened my eyes is realizing that every time that we start a buy side or sell side, we don't have to hit full external liquidity. So what does that mean, right? So if we look at a chart, right? If we just look at any chart, let me clear this all off right here. So we're done with that. So let me just look at any part of the chart here and look, okay. So what can you see here? Buy model, and then we consolidate for a little bit, sell model, okay? Let me find a good example of us not hitting external liquidity, and we still get into the next model, okay? So what do we have? Good example would be, let me find a good example here. Okay, so here, right here, look. So I mean, if we look at this, right? So this is miniature market maker bottom model right here. So buy side of the curve, then we get sell side of the curve, right? So you notice how we don't retrace all the way down and take out the full external liquidity on this? This is what I always used to get tripped up on. Like, how do we know we're starting the next market maker bottom model, right? The how we know is we don't have to return to external liquidity. All we have to do is return to either external liquidity, a PD array, most likely a high time frame PD array, or just return into discount, which we return into discount or not discount, return into the opposing side of the Fibonacci, right? So if we're looking to start a market maker buy model, then the sell model would need to retrace into discount, right? And then if we're looking to start a sell model, we would need to retrace into premium. So this is what I always used to get tripped up on, and this helps me a ton when looking at the market maker model, right? So knowing that we don't have to hit that opposing liquidity. So when we look at today's price action, I look at it like this, right? So we have this whole, let me get that tool out, this whole curve. So this is buy side of the curve right here, right? And then I know this is messy, but right now this is the sell side of the curve to me, okay? This side that we just went on, right? This whole side is the sell side. And it's messy, right? But that's fine. And what do? On NQ, we return to discount of the range. So it starts our buy model, theoretically. And then on ES, it's a little bit cleaner. What do? We return to high time frame PD array and discount. So that's how you can use that, right? So I mean, even right here, like we have a market maker model just on the high time frame, sell side, buy side, right? So what I want to really, I guess, harp on and I really want to like ingrain in your guys' head is the fact that if we zoom out, right, we can zoom out and all of this is just big market maker models, okay? So look, what does this look like to you? Sell side of the curve, buy side of the curve, sell side of the curve, buy side of the curve, okay? But if we zoom in, these are all mini market maker models, okay? So look, buy side of the curve, sell side of the curve, right? And then if we zoom in even further to low time frames, look at the 5 minute, just right here, we have sell side of the curve to the hourly fair value gap, and then we start the buy side of the curve on the hour, on the 5 minute. It's that simple, right? That simple. So the next thing I want to touch on is how we spot the actual reversal when it's happening, okay? How do we know when that reversal is happening? Okay. So yeah, we have this we have this market maker model, right? And that's very cool and stuff, but how does it actually help us, okay? How can we use this? How can we trade this? This was also the part that I always used to get tripped up on. But now, studying what I've studied, I know what the reversal pattern is, okay? It's simple. It's very simple. It looks like this. So on ES, so main markets are looking at ES and NQ, okay? So ES and NQ. So let me make this bigger. ES and NQ, okay? So ES, think about it like this. So we'll just use, for example, the market maker buy model. Okay, so the market maker buy model retrace to a high time frame SIBI, high time frame SIBI or bearish fair value gap. Okay, so let me draw this. What would that look like, right? So we have picture this as our bearish fair value gap, or SIBI. I'm going to call it because it's easier. So SIBI, picture this as our SIBI. Okay, and just imagine there's a high time frame fair value gap, and this is the fair value gap, right? So what would our ES look like? So we're retracing, 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 and we enter the fair value gap, dump a little bit, come back up, and then we dump below this, okay? And then we would just retrace into a fair value gap, okay? So what do we have? Let's break this down. So we have market structure shift here, market structure shift here, and then above this high, we have what? What? Answer it. Liquidity rate right there. And then we return into another BISI in this area, and then we expect a dump out of this, okay? And then at NQ, this is very important. So we don't want ES and NQ to look similar. You can trade them if they look similar, but that's not our biggest confluence. The biggest confluence is when we have some sort of difference in the stocks, and I'll show you what that difference looks like, okay? So we have NQ, and keep in mind, let me copy this again. So we have high time frame PD array, and it doesn't have to be the same high time frame PD array, right? So what happened on ES and NQ today? I just showed you. So on NQ, what did we do? We retraced into discount, retraced into discount of the range, and then we got the next model, right? But on ES, what did we do? Retrace to a high time frame BISI, right? So it doesn't have to have a fair value gap here, or it doesn't have to be retracing into the same exact PD array. Very important. So what do we have? ES or NQ looks something like, that's too sharp, sorry. ES looks something like this, or NQ looks something like this, okay? So we get into the BISI, okay? And then we come, take out the low, get this, and then we dump, okay? So what do you notice as the difference here? Just by looking at it, tell and I'll give you a second. Look at the difference here. And if you studied ICT concepts for a while, you should know this difference. All right, I'll draw it for you. So what do we have? Notice how NQ does not take out this high like ES does. So ES takes out the high right there. Oh shoot, I totally drew this wrong. I apologize. I apologize. Let me fix this real quick. There we go. Okay, way better. So do you notice how NQ never returns to take out this high right here? So this is the high on ES, and do you see how ES rates the liquidity? We have a liquidity rate right there on ES. On NQ, we never get that liquidity rate. Never returns to the value gap. So what happens? SMT at the high. So SMT is when we get a difference in the indices where one does not rate the liquidity. We don't have a liquidity rate on one. So ES takes the high, NQ does not, okay? And then we dump. So this is how we can look and see the difference between when we're going to start the market maker sell model, market maker buy model, right? So buy model is this exact thing, except it's just the opposite. So if we look, I'm going to try and spot some SMT for you guys. I'm not sure if we got any good SMT today. So maybe I can try and find some here. Let's see. Let's see what happens. Gonna try and spot some good SMT. And if we don't have any today, I know that we can find some on Friday. So we have that low gets put in, never takes it. Let's drop to the 1 minute and see if we find any on the 1 minute. And again, right? Remember, time is fractal. So theoretically, we should be able to find all of this on every time frame. But I'm not really seeing any good SMT here, at least from. We definitely had some at 9:30 open. I remember that specifically. So let me go to 9:30 open, right? Okay, perfect. Right here. Right here. Exactly. And this is and remember when I showed you that that short that you could have taken right here? So remember when I told you at 9:30 open, we had that manipulation like up, okay? So look, what do we have? We have a so this high right here to this low. Do you see that? This high to that low. And then on ES, this is or the high was here, okay? And technically speaking, NQ takes that high. Okay, and on NQ it's not external liquidity, so it's not the cleanest thing ever. But on ES that or NQ that high gets taken. ES that high gets taken. NQ that high does not get taken. We leave that high in there. So what does that set up for us? A perfect short entry off of this 1 minute fair value gap. And at this point, I think I was already in. So I mean, the SMT wasn't really needed for this trade, but I think I entered off of this fair value gap right here. So you can see that right there. But you can also see it in the right. So let's just put this in replay and watch. Okay. So we see that we're retracing higher. Okay. And 15-minute. Let's see what we're looking like on the 15-minute. Okay. So we have this fair value gap right here on the 15-minute. That's okay. Gets respected. Right. Let me just delete all this. So that 15-minute fair value gap gets respected. So we drop to the 1 minute and we look. So what do we have? We have this high put in here and we wait. This high gets put in. We wait and we have liquidity right here. And now we're looking short. Boom, there's the short entry. And now we're seeing it ride down. And this is where the SMT happens. So we take the high, does not take the high, and then we get another short setup right here with this fair value gap. I'll zoom in so you can see it. This fair value gap right here, another short setup, and downside. Boom. It's that easy, all right? So now I'll try to find you another good example from Friday. And I know I apologize that this is a long video, but this is very important. It's everything I've been learning for the past month, and I've been hiding it from you guys. So just stay tuned and try to enjoy it, right? So let's see if we have any SMT in here at all. Gonna have to go back a little bit on ES in order to find this spot. So it's 9:33. Yeah, and I predicted the open accurately on Friday as well. I mean, you can see that trade that I took on my Twitter. 9:30 open. Okay. Perfect. I think this actually is way cleaner. Okay. Oh, now I'm hyped up. Okay. So look. Oh, this is beautiful. Okay. So look what happens, right? So these two charts relatively look similar. Okay. So what do we have? We have this low gets put in, or we'll make it this low, right? Technically it's this low, but this low gets put in right here. NQ takes that low. What does ES do? ES puts in quadruple equal lows and does not take that low. So we have SMT at the low, SMT at the low, and then we have potential fair value gap entry right here. Not the cleanest entry, so you don't have to take this one. This is more of your less risk entry, but this one's definitely cleaner. So could take this low right here, and what do? Shoot, I mean, 2.5 handle stop, riding it up to potentially all the way up here. Like, come on, 20 handles. Like, it's just it gets too easy to spot. I mean, minimum, right? Minimum, you're targeting these highs over 5 handles that you get right there. So you have that. That's the exact setup right there, SMT. So let's zoom out here and look and see what this looks like. Okay. So I'm gonna go rewind to this exact spot on NQ and see what we're retracing to on the higher time frame. So we'll go to the hourly, right? And what are we retracing to on the hourly? Just look. What are we retracing to? Fair value gap right here. Nice fair value gap. Potentially in discount. Doesn't retrace all the way to discount, which is okay because remember, what are we looking for when we start the next model? We're looking for a retracement to a high time frame PD rate or discount or liquidity. Right here, it's a high time frame PD rate, and then we'll rewind to the exact same time on ES. Let me go to the hourly on ES. And what does ES look like? So ES retraces to this fair value gap. So both indices are retracing to fair value gaps, right? Neither one of them in a discount, which is completely fine, right? We don't have to get retracement to discount too long. We just would prefer it, okay? So we get high time frame PD rates on both NQ and ES, both of which we get that exact setup that I was just talking about. Exact setup. Look, what was I just showing you? Buy side, sell side. Ready? Look, look, look. Buy side, sell side of the curve. And if we drop to the 1 minute, it's even cleaner, right? So look, look, we can see. And you have mini models in here, right? But if you zoom out, look, buy side of the curve, buy side of the curve, sell side of the curve. Okay, and then we'll go back to what that pattern is we're looking for. When I just showed you it, look, ready? What's the pattern we're looking for? This one right here. And we could mix match these. It doesn't have to always be this. It could literally be this, right? Does not matter. Okay. SMT at the high at the liquidity rate happens opposite direction as this example. So we're going long. SMT at the low at the liquidity rate, then we start the next model. It's that simple, guys. It really is, okay? And I know that this is kind of different than what I'm used to doing, and I'm still trading my mechanical model, right? I'm just using more discretion with it. So what do I mean by I'm using more discretion with it? So let me show you an example of today. Using my model, how I incorporate market maker model and AMD, okay? Let me go over to ES. Keep in mind everything we just talked about, okay? So I'm on the 5 minute chart, right? And let's go back to the hourly. Let's drop out to the hourly. Look, let's drop out here. Ready? AMD. Accumulation in here. Manipulation leg down to hourly BISI right here. Okay? And now what can I do? Now that we've taken the previous session low and we've retraced to a higher time frame fair value gap, and we're expecting this to be manipulation leg, what can we do? We can look for my model, right? Look, it's super simple. Right here. Here it is. Look. So previous session low was all the way up here, right? I mean, it's all the way up here. Doesn't matter. We were tracing this high time frame fair value gap. We close above this BISI. We get this fair value gap right here, which is my NUX entry. I've covered that in another video. NUX entry right here. And then we continue higher. And we just hit those triple equal highs. And I just see someone just now sending their 20 handles into the Discord actually that it eventually hit. So I'll send this over real quick and y'all can check it out. So here it is. Look right there. I got an appreciation post, but look right there. Just happened. So I mean that's just the kind of stuff that you can really open your eyes with using AMD and market maker model, right? And I know that I'm not the greatest at explaining it yet. I expect to get better at it as I keep going. So you're probably asking yourself, Nux, are you done trading your model? Are you gonna continue doing your model, or are you gonna switch to fully AMD and market maker model or low time frame scalping and all of this, right? The answer is both. I'm going to look for my model, right? But I'm going to use AMD and market maker models to give me confluence of where the market's going to go, right? Because I'm no longer just going to be longing and shorting based off of overnight liquidity. I'm going to actually be looking for high time frame targets to then look for reversals and look for that reversal pattern that we got, not just reversing blindly. So that's kind of how I'm using all of this together. Again, I hope this really does open your eyes to trading, and I'm trying to explain this in a way that you can understand it, because when I first started trading and trying to learn AMD and market maker models some year ago, over a year ago, right? It was all confusing to me, and I feel like people make this way more confusing than it has to be. So I hope I was able to dumb it down to you guys so where you can actually use this and apply it tomorrow for your trading. So if you want to connect with me and you like this video, I would really appreciate you guys commenting, and subscribing on all of my videos. If you're interested in learning my model that I was talking about, my 5 minute model, I have tons of videos on my YouTube. Actually, until this point or up until this point, all the videos I've ever covered on my YouTube has been that exact model. So you can tune into any of those and learn that model very quickly. But if you want to stay connected, make sure you give me a follow on all socials at Nux Trades. I've been posting on TikTok recently too, so I post my daily plays. And if you guys want something where you can see my daily commentary, make sure you come join the Discord. It's what I just showed. It's in my Twitter and YouTube bio. Um, but yeah, I really appreciate you guys tuning in. I hope this helps. And until next time, I'll catch you guys later. Safe trading. Nux trades. Peace.